So I'm Cameron Smith. I run a business called Mayfair Private Office. We set it up about 8 years ago. We have two kind of business lines. We do private client advisory, which is high-end buying agency and estate agency, acting for ultra-high net worths, investing in London or owning in London across the UK. And then residential investment and capital markets, which I head up, where it's anything in the living space, but we specialise in PRS and BTR. In the last 24 months, we have sold the best part of 1,500 units,
Nice.
which is about £500 million worth of transactions. This has been a selection of operational stock, kind of bulk deals, which are the remaining units that developers had kept and rented out, and they're at the point of refinancing.
They need to recapitalise.
And the investment doesn't make as much sense as it used to. And then it's unbroken new build blocks. The difference I kind of have between like PRS and BTR and where we're seeing a bit of transition is that PRS is smaller, light touch, more traditional rental stock. BTR was this large,
Big
amenitized, like heavily amenitized stock. I think we're seeing a bit of a transition because tenants, where there's a squeeze, tenants don't necessarily want to pay for things that they're not using. They'd much rather be in better locations than overpay for things that they're not using. So there is a transition between institutions moving towards kind of light touch PRS stock. We kind of think there's a bit of a market reset. Things haven't stopped. Investors are being much more selective, and we see liquidity in kind of four places, really, 4 or 5 places. It's much harder to sell reversionary income at the moment. It has been for the last 12 months. Rents aren't necessarily moving at the same rate. You're also being compared to other sectors where yields are much higher in other sectors. But people want the living sector exposure. So we're seeing liquidity in unbroken blocks from house builders in better locations. Typically these blocks wouldn't have been available because they'll be selling on the open market, and you're now being able to acquire them. If you can get a 5% net yield, the stock will still trade if it's operational. Single family housing is obviously of huge significant interest to massive institutions. And then finally, where we're kind of seeing, and this is where we think things will go, is that when you get to significant scale, there is massive interest. When you get to that scale, the quality of the assets kind of becomes less important. And the individual locations, it's about the platform. The European, the American funds that are coming in, they're used to deploying at significant scale, and they need to cut significant checks to make these things work. Different yield profile, and then the market evolves. The market evolves again. Single family, I think, is still going to have significant growth, but there is capital out there. There's no shortage of capital where it becomes far more institutionally acceptable. Our value piece is that we are a small team. We're more aligned to the outcome than kind of more traditional agents. If we don't do a deal, we don't make money. We will work 24 hours a day to kind of get deals done. We can sit on the legal calls. We can get involved in the technical DD. We understand real estate.
From start to finish.
And I think sometimes our clients are a bit surprised that we can sit there and we can give advice on what we think should be done, and rather than just send an email and send an invoice. We're very passionate about adding value, and if the right thing is to do to not sell it, we will tell them. We've been doing this 15 years. I was at CBRE for the best part of 7 years. We've been doing this a long time, and now we're kind of at a point where the expertise is now shown.
And you've got that compound effect from all those years of, and now the expertise are coming through.
And I think like American private equity like working with people like us because the American model is very broker driven. People work hard. And I think the uncertainty, no one likes uncertainty. What's going on in the Middle East is not nice. I do think there's an element that it can remind people of what the UK is about, being a safe haven.
I mean, we was already seeing US and Middle Eastern money come in, but I think that will probably compound now.
But my predictions, I think there will be opportunity. I think the summer might be longer because people are going to wait and see what's happening. But as I say, look, the supply demands of the UK across the living sector are some of the best in the world. That's why these institutions and funds.
Well, that's why they're here, right? That's why they're flooding the market.
We've got great schools, you've got great kind of universities.
Great infrastructure.
Fantastic. You've got some of the best restaurants in the world.
You've got the safest legal system in the world.
Yeah.
You've got the best regulation.
And the population growth and the construction restraints that have happened over the last 3 years are only driving the supply demands.
And let's be honest, London's the best city in the world, right? Look at this.
It's amazing. That's why so many people come here. But I think we're certainly continuing to help money kind of find the right opportunities that suits them, and developers and landowners get the best value,
get the
and
maximum,
and get the right result. The challenge in difficult times is that it doesn't always feel like there's a winner on both sides of the transaction, which is never nice to see. If you spend 8 years in planning and development on a site, it's not nice to not get the value or even lose money. I do think the other, like the rental sector, like we're a much more transient generation. So the living sector, I think, is only going to grow. I think it's going to become more institutionally acceptable, and I think the quality of the homes and the housing that is being delivered is improving further.
Yeah, 100%. Yeah, like you said, the quality is getting so much better, isn't it?
Yeah. And it's really interesting money. It's long-term, institutional pension fund money.
And that
global money that believes in the fundamentals of the UK, of the living sector, and wants to be here for 10+ years.
And that money coming in only benefits the money underneath.
I guess the only thing we would say is we're always open to conversations. We speak to some of your clients. We're happy to speak to banks, lenders, to give the right advice. We've done best part of £500 million worth of transactions in the last 24 months, well over 3 billion in our career. And if we can help, we'd love to have a conversation.